Welcome back everyone to another technical analysis, and today we're taking a look at the Bitcoin. Now, this video is going to be way longer than the usual ones because first of all, I haven't done any videos on the Bitcoin, and second of all, there is a really high chance that we will see an actual start of the bear market very soon. So everyone is talking about how markets will pump, this is just a liquidity sweep and this and that. What we actually waited for when we were in this region wasn't an actual breakdown, but what we wanted to see is, or was, the similar movement. So we had one more hiccup up from here, and then the movement to lower zones, which should have started at around March, but we are not the Houdinis, so we can't predict everything. Anyways, very similar setups are forming. Just as the last cycle of the bullish cycle finished, it was double top. Same here, double top. Then we had the neckline formed, same here, and then a really sharp breakdown. So as soon as we had a proper breakdown, it was sharp. No remorse, no wicks here as well. So you can see there is no wick or similar to here. So just a full breakdown and a liquidity sweep. The previous one was 40%. This one we had like 34. It doesn't matter because the candlesticks, they are not actually the representatives of the previous times what happened, but what is more important that we might be falling for another like 40% from current market price. So in total we fell like 51%, which equals exactly the same area that we pointed out. Now we pointed out this area just because there was some sort of like a roundish area. So approximately this is the time span of the timing with the months and timing with the liquidity sweeps as well. Most ideal, this is the area where price should see some kind of reversal, and this would be our also ideal entry or an accumulation area for the Bitcoin. But as of now, we are waiting for a further downside movement, although on the smaller time frames expecting to see some kind of upside movement to the upper zones. So getting to the smaller time frames, I think I will remove everything besides this area here. So it's like, let's see, this one we will keep. It's 79 to 82 basically. So 79 to 82 and 82. So that's an approximate area where price might be heading towards, which is again on the bigger time frames, this neckline area just on the smaller time frame. So something like this. Now we might not see it actually, but because each cycle is different, this is what we are expecting as of now. For this kind of setup, we need to see a proper breakout from this area, then a decent, getting this path here, so a decent breakout, some retest, maybe accumulation, maybe fake out, but then eventually another breakout structure, and this area here would be the ultimate entry for us. So we have a decent breakout, then we have a downside movement, correctional movement maybe, accumulation area, and then another breakout structure area. So this would be the breakout structure area. This is the market structure break, and this is the MSB, and this is the BOS. Damn, I'm getting messed up with these terms because of not used to speak them out loud. But that's the game plan for the smaller time frames, and as of now we are seeing that price is actually moving pretty decently. Now what also I'd like to point out, one thing that forgot to say or mention on the monthly time frame, is the only thing that is indicating that we might see a potential movement to the upper zones is that last time we had a breakdown, we had the liquidity sweep, and then some kind of sideways movement with some kind of bullish momentum here as well, happened throughout the time when RSI was near these regions. So what's more interesting is that RSI actually has never stopped or never went to the oversold area, which should happen anytime in the future because this doesn't make any sense otherwise. But what we can take from here, we had the price in overbought area, similar to this area here. So we had one time when it went for the new all-time high. Second time, we can call this whole block here. So this is the whole block, and this is that one time after we had another breakout from here because it was very volatile. Now, since price broke down from this area, actually, it's pretty interesting because the ideology of here would be that we should push, but imagine if markets would just mess everything up and we just keep tanking down without any kind of correctional movement. And this would be pretty interesting actually. But anyways, and one thing more on the monthly time frame, this indicator here, what we very like to use, it is a middle line of the Bollinger Bands, and going to look at the Bollinger Bands, the smaller time frames as well. But we had a strong breakdown, and this is also the thing that we like to use as an indicators that markets are in the reversal stage. So we had a breakdown similar to this one actually. The zoning and timing is everything the same. The neckline, breakdown, neckline, breakdown, and now most likely we are going to switch into the bearish market on the monthly time frame. But again, on the smaller time frames, there is a chance of seeing a small hiccup. Maybe even not to this area, but at least this zone might be a zone which buyers would like to fill. Because weekends might be very volatile, and that's the game plan that we see the short term. Overall, of course, going to expect to see and wait for this area to be broken on the 4-hour time frame. As soon as this is broken, we're going to just go into a short position with the same strategy that was used here as well and here as well. So going to explain right now very quickly. Let's remove this one, and this one. So the ideal entries for this kind of when we have breakout structure here, so we have break, stop loss near the local high, and target has to be twice usually, no more, so 10%. Now going for the new one, we had a nice breakdown like that, and again 10%. So risk reward ratio in those cases is always 1 to 2, no more, no less. You can go for more, but it would be already a gambling. This is the best way that we like to do it. So going to expect to see a similar movement here, break of this area, and soon as we break, the next target for us would be, so this would be like that, and this would be like that. Now because of the market price difference, what we would do is of course smaller leverage, but the target would be the ultimate 43%, which again on the bigger time frame, so the monthly one, is exactly the area that we pointed out as our major target area. So you can see this is the last potential breakdown that we're supposed to see. So pretty messy charts, pretty messy markets we are right now, but that's it for the Bitcoin. This is the overall movement that we are expecting to see. One thing more, really like to use the Bollinger Bands on the daily and weekly time frames, usually on the daily time frames, but let's check on the weekly time frame. We're in the oversold area. You can see price just went to the oversold area, similar to here as well. We were just tanking. So as long as price stays below the middle line, so let's go to the monthly as well. Yeah, monthly is messed up slightly, but You get the point. On the monthly time frame, look at the middle line of Bollinger Bands. On the weekly time frame, look at the Bollinger Bands upper and lower sides to take them as an indicator. Once we had the switch, we didn't put so much attentions to this one, but we hoped to see another bounce from here because it was also near the EMAs, but those are just the indicators. Market moved purely on the emotions of the traders and thanks to all the news economical that were released. So, and lastly, daily time frame, heavily oversold here, so might be expecting to see a smaller correction movement towards this area. Maybe not towards this area, because then it would mean that we might be actually back in the bullish markets, but we'll be honest, I don't think so. So anyways, that's it for the Bitcoin. Thank you for watching, and I will catch you on the Monday.